All right, so let's begin the show and let's take our viewer queries first. And to answer our viewer queries today live, I have with me Harshvardhan Rumta, CFP, Rumta Securities. And just in case you're watching the show live, you can send across your questions on our WhatsApp number, which is 865-797-4571. You can also email us your questions on the money show at etnow.tv. Hi Harsh, good evening and welcome to the show. Let's take our first question, which is from Ravindranath. And this question is via email. Okay, I think we will take Akriti's question first. So Akriti has given her portfolio, which says that she's having ICICI Pru, Value Discovery, HDFC Top 100, Invesco India, Contra, Motilal Oswal, Flexi Cap, Axis Small Cap, Motilal Oswal Small Cap, Nippon India Small Cap, SBI Large and Mid Cap, and she wants to know if these funds are right or if any changes are required. So we do not have Akriti on the phone line because I don't know the time horizon for this investment, but she's been investing 1,000 rupees in a couple of funds, 4-5 of them, and rest is 2,000 rupees per month. So we don't have a lot of details for you to figure out if the strategy is right, but then let's talk about the fund selection, assuming for not less than 5 years she wants to stay invested in it.
Yes, Kavita. So, we'll assume as of now, because it's a 100% equity portfolio, we assume that it is for long term. Now, having said that, I mean, if I just look at it, she's investing a total of about 8,000 rupees every month, for which she does not clearly need, I'm sorry, she's investing 11,000 rupees every month, and she has 8 schemes included in her portfolio. So, very clearly, she does not need 8 schemes for this 11,000 rupees. She can very well consolidate her portfolio into much smaller and a sleeker portfolio for now. And I'll pick 3 schemes out of her existing portfolio itself. So she doesn't have to really go around opening a new scheme or a folio or whatsoever. So she'll retain ICICI Pru Value Discovery Fund, in which she will invest 4,000 rupees. SBI Large and Mid Cap, in that she can invest 4,000. As Nippon India Small Cap, in which she'll invest 3,000 rupees. Now, with this, she will have exposure to all market categories. And going further, if she wishes to add a further SIP amounts, then she can possibly add a FlexiCap fund as well. And with regards to her investments, existing investments in her other schemes which she have not shortlisted, which is like a HDFC Top 100, Invesco India Contra, etc., she can redeem out of all of them and just reinvest it back into the 3 schemes that we've asked her to retain.
One basic or one common problem that we see in a lot of portfolios which are sent to us, Harsh, is that people have a lot of funds in their portfolio. Let's help our viewers understand why it is right to have not more than 2 or 3 funds. If, for example, your investment amount is 10,000, what could be the disadvantage of having 10 to 12 funds in your portfolio? I'm sure you've answered queries where investors have had like 20-25 funds in their portfolio. So what exactly goes wrong if you are so vastly invested, and what are the benefits in having a very consolidated and a smaller portfolio?
So, well, Kavita, let's put it like this. One is the disadvantage of having too many schemes in your portfolio. Okay, so we'll start with that. So, the first
Sure.
and foremost is that if you are investing, say in this example, she has 8 schemes in which she's investing 11,000 rupees. So, on an average, it's about 1,000 rupees in most of the schemes, and 1 or 2 schemes she has about 2,000 rupees. Now, if you see in her portfolio itself, she has 2 value style investing funds. She has multiple large cap schemes. So and a couple of 2 or 3 small cap funds. So what is important is just because you have schemes of different fund houses, but in the same category, do you believe that you're really getting diversification? No, you're not enjoying any diversification. If you see the portfolio overlap ratios, you will see that almost all the same companies which are in, say, portfolio A of a fund house will be there in portfolio B of the other fund house itself. So you're investing the same companies through different fund houses. It doesn't really make sense. Now, if you have 8 to 10 schemes for an investment of 10 to 11,000 rupees, you will have to, if there is any updation of bank details, suppose you want to change your bank for redemption purposes, you will have to update those details in all the folios across all different fund houses. So this is unnecessary administrative burden that you're putting onto yourself. Is there a real advantage of diversifying into different fund houses? In this case, no. Whereas if you have a consolidated portfolio, for example, now we've shortlisted 3 schemes for her. We've kept 1 scheme in the value oriented, we've kept one in the large and mid cap, and we've kept one in the small cap. So with this, she's getting an exposure across all different market segments. And unnecessarily, we have cut down on 5 schemes. So administratively, it becomes much easier for her. There is no overlap. She has an exposure into all market capitalization. So I think that's essentially the advantages and disadvantages.
Very well explained, and I think a lot of it will happen more as and when we come across more viewer queries. Who is the next viewer's query do we have? Okay, let's take Shubhangi's question. She says that she is an NRI with 2.5 crores to invest in India, and time horizon is 25 years. She wants to know what are the funds that she can go ahead with. Interesting question. Before that, let's also talk about NRIs investing in mutual funds in India, and what is the route through which they can do this, and what kind of specific countries investors also are we talking about? Harsh.
So, well, Kavita, as an NRI, you can most certainly invest into mutual funds in India. So that's not a problem at all. You can invest either through your NRO account or your NRE account. So if you're transferring money into your NRE account and you're making an investment out of that, it is fully repatriable and you can take the money out of the country at any point in time, at the time of redemption. The only thing that you'll have to keep in mind is that if you're investing in mutual funds, and if you're making a redemption, so suppose at the time of redeeming the money, whatever is your tax liability, suppose it's a short term or a long term capital gain, whatever the holding period may be, the mutual fund will give you the redemption proceeds after deducting TDS at the rate at which you are supposed to be taxed. So with the 15%, with the short term capital gains, there'll be a TDS retained for 15%, and the balance amount will be given to you. If it's a long term, then 10%. So investing is not a problem. Of course, you can go ahead and do all of that bit very conveniently. With regards to KYC, there was certain rules that were being changed recently, which has been again brought back. So you need to just ensure that your email or your mobile number. So in most cases, NRIs would have international numbers, which cannot be possibly added into your KYC records. So if you don't have an Indian number on which you can verify the mobile number through an OTP, ensure that at least you have your email ID in which has been verified, so that there is KYC is not on hold. It goes on to the investment mode. So these are basic hygiene things. If you are if you're an investor from US and Canada, then of course there will be there will be certain mutual funds that will be catering to your requirements. So you have to find out which are the schemes, which are the fund houses rather, which are accepting investments from NRIs based and residing in US or Canada. There are some fund houses who do not accept SIPs from residents of US and Canada. So there are a few things that you just have to keep in mind. Now, with regards to Shubhangi's specific query, she wants to invest 2.5 crores and she's only specified the time horizon. Now, and asking for scheme recommendation. Well, Shubhangi, I would like to refrain from giving you any scheme recommendation without knowing what are your goals, where are you, what is your possibly asset allocation that you're looking at, what is your risk profile, because the amount that we're looking to invest as lump sum is pretty large in nature. You need to figure out whether you want to invest as lump sum right now, you want to go as an STP, a systematic transfer plan, and then certain information will also need to be evaluated whether you're planning to keep this money in India itself for long, or when you come back after retirement, or you're just investing right now and you want to pull out the money again after some time and take it back to your home country. So we'll have to figure out all of those things. I think it will be very rash to possibly give you a scheme recommendation purely based on saying that you have 2.5 crores for 25 years. I don't think that would be the right approach at this juncture without knowing what exactly is the risk appetite and how we should go about with your asset allocation. So at this juncture, my suggestion to you would be please meet a professional in person, discuss out all these details. The amount involved is pretty large. I would suggest that you should personally meet somebody, discuss it out, and then create a portfolio would be a better approach for you.
All right, Harsh, let's move on to our viewer, Mr. Suresh Kumar, and he's on the phone line with us as well. Good evening, Mr. Kumar. How are you doing, sir? From where are you calling?
I'm calling from Kerala. I'm fine.
Okay, sir. Sir, you want us to recommend you some mutual funds. Before we do that, I wanted to know some details from you. You cannot take much risk and you want high returns as well.
Yes.
Keeping that aside, I want to know the time frame for which you want to stay invested, sir.
Like around 5 years.
5 years. Have you been investing in mutual funds already?
Yes, yes.
Do you know the name
But
of your
it
funds
is
right
all
now?
in small cap. Small cap.
All small cap.
Yeah,
But sir, you have written us that you are a less risk taker and you have all small cap. The highest amount of risk you've taken in your portfolio.
So that is a small portfolio only. I am doing SIP.
How many small cap funds do you have?
I'm having three. That is HDFC small cap, Quant small cap, and Kotak small cap.
HDFC, Quant, and Kotak. Sir,
Right.
even if you have three mutual funds, three small cap funds, the number of funds is just three, but the kind of exposure you're getting in that particular category is very huge. You are in fact over diversified. Even though small cap has a very large universe, you already have three funds in your portfolio and you have taken maximum amount of risk over here itself. Okay. So in this small cap category, you want to stay invested for how long?
No, this I will continue. Okay. When
You will continue for more 5 years again?
Yeah. I will continue. And if I find some problem, I will switch it over.
Okay.
Later on.
Now I want to understand the entire investment that we are talking about. Is there a particular goal attached to it? Do you need that amount, that corpus for something which is very specific or a goal that's aligned?
No, nothing specific. Only I want to meet day-to-day expenses through that.
Okay. How much would be the corpus that you might want to accumulate from this investment?
Maybe 40 to 50,000 per month. I will be want to
40 to 50,000 per month is what you need for your regular expenses from this investment itself?
Yes.
Okay. How much are you willing to invest?
No, around 10 lakhs I am willing to invest. Plus, I want to start an SIP for 30,000 per month. So that can be in higher, large caps or anything.
Sure. Right now, what's the SIP amount, sir?
That is around 5,000 per month.
15,000 already going.
No, altogether 5,000.
Altogether 5,000. Okay.
Yes.
Okay.
So
So
I
that
want
will
that-
be 30,000 SIP and 10 lakhs you already have lump sum amount that you want to put in the market, right? For 5 years.
Right.
Great. Okay. Are you okay with the hybrid strategy where you will have some component of equity? Well, looking at the small cap funds, it will not be so risky. Are you okay with that?
No, I don't want to go with small cap. I want maximum
Okay.
exposure to large cap for the
Sure.
SIP and for the mutual fund.
Sure.
With the best
And
return.
5 years, okay. And 5 years is the benchmark. You are not ready to go beyond that.
No, I can go. It depends upon the time. How it will be
Sure.
in the future. That time I will think about
Sure.
it.
Sure. All right. Okay, so let's do your financial planning. So, Harsh, a lot of clarity over here. You did not have those details, which is why I tried and, tried gathering all those informations for you. So, he already has small cap. So, your comment on his small cap funds, and later on, 10 lakhs that he wants to put plus a 30,000 SIP over and above the 5,000 going on in all the small cap funds. Harsh.
Well, Kavita, I think you've hit the nail on the head, types. When you're asking, because see, Mr. Kumar, what you have asked is, let me just highlight on that point. You're saying you suggest some scheme which has less risk and high returns. So it's a very popular notion that every investor would want. It's basically a desire that every investor would want, saying that I want to take the least amount of risk and I want the maximum returns. So, well, first, as an investor, we all need to get our basics clear. And that basics is what? That for every incremental return that we're expecting, there is going to be a higher risk that we have to take. There is nothing called low returns and low risk and high returns. So there is nothing of that sort ever existed. So if you want higher returns, you will have to be prepared to take higher risks. Now, higher risk need not necessarily mean that it is going to cause a loss. It just means that there is going to be higher volatility. There's going to be certain, a bit of uncertainty in the way the returns will be generated. So you have to understand what is the risk. How do you handle volatility? So if we are desiring to have higher returns, the possibility of get higher returns is through, say, probably investing into equities. Now, equities we know is a high volatile product. Like you've seen what happened on the election counting days, the voting counting days, the market fell and the next day it recovered. So you need to really have a very strong heart if you want to be into stock markets. It functions not like the way we want. It functions on its own pattern, and they're very sporadic in nature. So there is going to be risk, there is going to be volatility in case you want high returns. Now, if you understand the relationship, then you would be well prepared to invest into something. If you enter into something or you ask somebody that I want a low risk product, but I want high returns, then most certainly if somebody is offering you something like this, it's probably a mis-selling that is happening. Now, coming to the point that you asked, that you want to invest for 5 years, you already have a certain portion invested, which is a very small, minuscule amount of, say, 5,000 rupees into three small cap funds. One is that you don't need that. So just keep one. So probably an HDFC small cap is good enough for you to retain in for that 5,000 rupees. Now, coming to your other requirement, which is after, in 5 years' time, you want to accumulate a corpus, which will help you get 40 to 50,000 rupees every month. That is what you mentioned, for which you're willing to invest 10 lakhs as lump sum and then 30,000 rupees as an SIP. So I'll divide the lump sum and your SIPs into three schemes. Okay, so we'll have two balance advantage funds. These are basically hybrid funds, not pure equity funds. But since you're looking to invest for 10 lakhs in lump sum and your time horizon is only 5 years, I'm suggesting that you put a portion of that money into balance advantage funds. So you could choose an ICICI approved balance advantage fund and a Tata balance advantage fund. In these two schemes, you could invest say, probably 4 lakhs each. So 8 lakhs of your 10 lakhs will get invested into two balance advantage funds. Now, one, I will give you a large cap index oriented fund. So which is an ABSL Nifty 50 equal weight index fund. Now, in this, you can put a lump sum of the balance 2 lakhs that you have and the 30,000 SIP that you want to do. Now, this you flip it the other way around, which means that you have a higher SIP allocation to a Nifty 50 fund and a lower allocation towards the balance advantage funds. Because in the lump sum, you've done the other way around. You've invested a larger portion in the dynamic asset or balance advantage funds and a smaller portion in the equity fund. Now, in this case, the ABSL Nifty 50 equal weight index fund, you put 20,000 rupees as SIP in that, and the balance 5,000 each, you just put into two balance advantage funds, which is the ICICI and the Tata balance. So I think this is the approach that you will go ahead for the next 5 years. Post 5 years, you can set up an SWP, a systematic withdrawal plan, wherein you can withdraw the kind of money that you want from this accumulated corpus at that point in time.
All right, I think that's a very well explained answer. And just in case you've missed any aspect of this recommendation or answer, you can watch it on our channel's YouTube. We have the playlist of the Money Show, and today's episode will also be going there, so you can again hear out what Harsh is trying to recommend. All the best, Mr. Suresh. Let's move on. I have Mr. N. Lakshmi Nakini on the phone line with me. Hello, good evening, sir. How are you doing?
Good evening.
Thank you so much. It seems you were on hold for a very long time. So you want to build a long-term portfolio for your grandson, and he's 7 years old now, and you want to understand if investing in equity, ETF or direct stock would be recommended. And you want one or two equity ETFs or 3 or 4 shares for direct investment. So for shares, I would recommend a lot of other shows on the channel that come in the morning. Maybe the shares part of this question can be answered there. But then let's talk about the strategy that you might want to have, and it's a great step, thinking of the financial secure financial future of your grandson. So Harsh, what would you recommend?
So yes, it's a very good thought that when your grandchild is just 7 years of age, you're planning to invest for him. So I think it's a brilliant move. I mean, your grandson will be very very grateful to you, sir, by the time he turns a major, because you would have accumulated a reasonable amount of corpus for him for his further requirements. So what I'd recommend, as Kavita mentioned, with regards to stocks, you could possibly log into other shows that ET now has, and you could have some recommendations from there. What I could help you with is certainly on regards to your ETFs and mutual funds. So, well, I think just having a large cap index base and a mid cap index ETF would suffice, and you would currently have a decent exposure to the entire economy by and large. So, in the Nifty 50 ETF, I could suggest an SBI Nifty 50 ETF, and in the mid cap, I could suggest a Mirae Asset Nifty Mid Cap 150 Index Fund. So these are the two ETFs that I can suggest to you, and you can have an equal exposure into both of them and start this financial journey for your grandson.
All right, all the best. Let's move on to our next viewer's question, Ravindranath. Okay, Okay, let's take Priyanka's question. She's on the phone line with us. Priyanka, hi. Hi, Priyanka, good evening.
Hi, Kavita.
Hi. Okay, so Priyanka, as per details that you've given us, you have Parag Parikh Flexi Cap, Quant Small Cap, HDFC Retirement Savings, ICICI Pru, BSC Sensex in your portfolio. You want to know if
Yes.
this fund mix is good for you, and PSU mutual funds have doubled last year, so you want to know if you can have that exposure. Also, I wanted to understand what is the time frame that you're looking at, the overall time horizon for this portfolio.
Yeah, so basically, currently I started mutual funds like 6 months back. So I'm
Sure.
looking at next 1 year worth, and I wanted to do some investment, like one-time investment in mutual fund, like a lump sum amount, and I would look at it for the next 1 year. So I wanted to do it by the end of this month, so that once my salary gets credited, I can plan accordingly.
Okay, so let me get it right. Lump sum investment is definitely going to be there, but the entire portfolio is just for 1 year?
No, for the entire portfolio, I'm looking long term, like 5 to 7 years.
5 to 7 years, right? Okay. What's
Yes.
the financial goal that you want to achieve from this portfolio?
So I want to make sure that, I don't have a number in mind, but I wanted my portfolio to deliver me a return of somewhere around 45%.
Okay, after 5 years.
Yeah.
Okay, sure.
But annual
Let us
return I'm
help.
looking at because, annual return I'm
And
looking at because that's the reason I wanted to
annual
do the
return
lump
of
sum investment.
45% from this portfolio.
Yeah. From the lump sum portfolio.
Okay, what is the lump sum amount that you want to put in?
Close to 1 to 2 lakhs.
Sure. Okay, so that's a lot of information for Harsh now.
Mm-hmm.
Harsh, can you hear me? Harsh, can you
Yes,
hear
I
me?
can, Priya. Kavita, I can hear you. Yes.
So 45%, how is that possible?
So Priyanka, I'll have to really disappoint you because I don't think I would have anything in my bag to offer you something which will give you for sure 45% in 1 year. So let me just highlight something to you. Yes, I agree with you that PSU schemes could have possibly doubled in the last 1 year, and but that's how equity is. I mean, you will have some periods wherein you will find extraordinary returns on your schemes, but that necessarily does not necessarily mean that that's the kind of returns that will be generated in future. Ideally, if you have a time horizon of 5 or 8 years and beyond, so let's look at it like this. So your minimum time horizon being, say, 5 years or 8 years and beyond, then we look at an average return of a median return of about, say, 12 to 15%, which means in some times in this next 8 years, you will find a return of, say, 40, 50% that you're looking at. In the other periods, you possibly could even incur a loss, or you could just have flat returns. So if you look at the average return that an investor could expect over a period of, say, 5, 7, or 8 or 10 years, on an average would be about 12 to 15%. Now, it's not going to grow 12% every year. It's possibly, as I said, would go to 40% in 1 year, go minus in the other year. It just could fluctuate like this. And on average, you'll get about 12 to 15%. Now, because your time horizon is only 1 year, I think it will be very ambitious to assume that I can generate a 45% kind of a return. So if you put a 1 lakh rupees, it should become 1,45,000 after 1 year when you need it. God willingly, I mean, the markets continue to do well and you may get it. But to assume that to get, I mean, it's fairly ambitious. So I would desist and, refrain from giving you any scheme recommendation unless you promise to increase a timeline to at least 7 to 8 years. Then possibly equity investments make sense. Coming to your SIP investments, when you clearly specified that SIPs are going to remain for 5 to 7 years, well, then in that case, what you're investing into is fairly good. Now, with that portfolio, I just could consolidate it a little bit. Now, Parag Parikh Flexi Cap is something that you can retain but invest 3,000, what you're already doing. Quant Small Cap invest 2,000, which you're currently doing. I'm just changing one scheme. You have an HDFC Retirement Savings Fund. Now, this scheme has a minimum lock-in of 5 years. It's a solution-oriented investment scheme, so that there will be a lock-in of five
Right,
years for
Harsh.
every investment that.
Sure, sure. Okay, so I think that will be all on the show, and thank you so much, Harsh, for helping our viewers get their financial portfolio strategies right. I'm going to sign off, and I'm going to leave our viewers with our WhatsApp number and email ID. Thank you so much for watching. Goodbye.
If you like this video, then like, share and subscribe to ET Now.